Hello, Dave Farmer, Loan Consultancy, and I want to bring up to speed on the recovery loan scheme, which seems to be a big topic of conversation amongst my clients at the moment. The scheme launched today, which is the 6th of April, and it is the successor to the interruption loan scheme, the CBILS, the bounce back loan scheme, the BBLS, and the large interruption loan scheme. What does it mean, and how do I see this scheme working as we move forward? Well, for those of you with a slightly longer memory, you might remember the Small Firms Loan Guarantee Scheme. This looks pretty similar. And what we're seeing from some of the high street banks is a very similar approach to that. Now, what this means is that the government will provide a guarantee to the lender of 80% of the loan value. So in the event of default and they can't recover any money, the government will pay the lender 80% of whatever's outstanding. Loans under £250,000, there's no personal guarantees, there's no personal liability to the directors of the borrower. But the caveat is the lender needs to prove that they've assessed affordability. And that's my first big question. How do you do that on the back of a pandemic? We know companies have not had great years, so how do you justify affordability and test that? We wait to see what happens there. Now, from one of the high street banks has already come out and said if they can lend in any other way to using the recovery loan scheme, they'll do it. Which seems to be that actually the recovery loan scheme is a less preferred option. And I think we're going to see that from some of the high street names. That they will try and back away from the recovery loan scheme because they'd rather secure their borrowing in a more traditional manner. But what does that mean? I think what it's going to see is that the alternative lenders will come in and will really make hay in that space. They've got an opportunity to grow market share and to turn these schemes around far quicker. At the moment, we're still waiting for more lenders to come onto the scheme, and from what we saw previously with the CBILS scheme, that's going to take a little bit of time. We think you can apply for any lender for this scheme, and that's good news. There are a lot of differences between the RLS and the old schemes it replaces. And those differences, again, I think are a good thing. The key is in how will lenders use the scheme and how keen will they be to use the scheme. Those are the bits we're going to find out over the coming couple of weeks. If you've got clients or you are looking at applying for the scheme now, my advice to you, get everything in order, but hold fire. Because at the moment, there aren't enough lenders on the scheme to give you the choice to get the deal through that works for you. Get yourself prepared, and as soon as details are there, we'll get them to you, and then you can apply. So in summary, my big concern is it will be a less preferred route to lend, even though it's good news for the borrower. And also, we need to wait for more lenders to come onto the scheme to make it truly viable. Any questions? Get in touch. Join our mailing list. We'll keep you updated with the information as we get it, and then we can be in the best position to point you in the right direction as to how you access these funds. Any questions? Get in touch. Follow us on social media, and I'll talk to you again very soon.